Well, today's December 29th, 2018. My last call said there was a good chance we gapped down at Friday's open. We gapped sharply higher instead, and that, according to the rules, killed the call before the open. MEJT said lower price it would print, which they did. Said the rally to new highs was false, would retrace. New recovery highs was false, would retrace, and it did. These dates are on the verge of being sent back to the minor leagues, but I think this one, the 28th, is going to work. I think the odds are overwhelming. This is a significant high. We have a pattern where we gap up, hit a higher high, couldn't hold on to any of the highs at the close. We also have an ABC up with A equal to C. Monday's pattern is the one with the early low. Doesn't mean you won't gap up first. Here's a long-term chart. You can see how he stopped right at trend line resistance from here and trend line resistance from here. The rally was a 38.2% retracement of the recent drop, and the high was also Fibonacci target of the middle swing of the prior consolidation. Added on to the fib resistance, weak chart pattern, and trendline resistance, you have excessive optimism among equity options players. At the low, they all wanted to buy puts in excessive amounts. Here it's been months, certainly off this chart, since they had such a desire to buy calls. These people are almost always wrong, and wrong in spades. Looking for lower prices Monday. Gapping up, taking out this high kills the call. Otherwise, lower prices should print. I am not confident this low is going to hold on the next leg. We came awfully close to a target. We hit 23.16 in futures. They're kind of giving you a shot across the bow that lower prices are coming. And that's today's call.